Hey, how are you guys doing today? It's me, Anthony Tirado with AJTFX Learning. In today's video, what we're going to do is we're actually going to start talking about zones. If you guys watched the previous videos, we actually already covered a little bit of structure in price. We covered support and resistance in price, where when you look at structure of price, what you're going to realize, the structure is based off of where that market has reached, where market has been in the past, but definitely making reference to, more of a present touch where literally you're able to look to the left and see if that market structure is holding. Now, when you relate that to the support and resistance levels that you identify, whether if that's on the 4 hour, on the daily, on the 1 hour, or maybe just structure levels on those smaller time frames, what you're able to do is now have ideas of levels of interest that the market is going to react from. So that's how you're able to differentiate the two, where when you're literally trading, you want to make sure that you're still abiding by structure of price, where you want to make sure that the market is reaching these levels where the market has been. Like right here, this is a nice level of structure, and then boom, as you can see, it did a retracement from that before making some moves. So just being able to look at the market, like for example, this right here is Confluence. It's a horizontal level on the 4 hour. It's a nice level of price, because what happens once this market comes back to this level of price on structure, boom, you get some reaction. But aside from that, in today's video, what we're going to do is we're actually going to talk about zones. And a lot of people like to call it supply and demand. A lot of people like to get all economical and give us the terminology that's used. But pretty much, let me actually just give you guys a little quick breakdown of things, because, for those individuals who don't understand the supply and demand factor, let me actually break things down. Where when you actually look at it, what we're obviously doing is we're looking to get into currencies that are what we're either going to move to the upside or move to the downside based off of what technical analysis, seeing how the market's playing out, maybe a little news action might make some spikes. But best believe supply and demand definitely makes reference to, because when you utilize the concept of supply and demand and apply it with your zones, it's going to make things so much more easier to understand. So for example, let's say I'm a retailer and I have a lot of supply. What you're going to realize, if there is no demand for that supply and I have a lot and a lot and a lot and a lot of shirts, there's going to be a moment where I'm going to have to start making that price go down so people could start being attracted to buying it, right? So what you're going to notice is when you reach a level of supply, the market's going to want to come to the downside. And then once you reach a level of demand, now for example, if I'm already at this point that every time I launch something, the market wants it, I launch a new shirt and everybody wants it, once that market reaches that demand, it's gonna drive the price up. Because maybe now at this point I'm selling so fast because maybe the price is too low, or maybe it's just so good people like it, or the service is great, right? But regardless, if that demand is there, that's going to do what? Drive that price to the upside. So what I'm going to do is I'm going to actually show you guys how we can utilize those two concepts of supply and demand, but at the same time apply them to zones so you can understand where to get into the market, where to get out of the market, how you can apply to this market and see how it plays out. Here, I'll actually just put this somewhere right here so you guys just can remember that. But what I like to personally do is when I'm dealing with my zones, right? We already talked about structure, we talked about our horizontals. Now let's talk about zones. Because one of the key things you're going to notice is when you're marking up your chart, it's not an exact point where the market's going to, make a move. The great thing is, by being a little technical, understanding how the market is played out, marking up your charts, it gives you better probabilities. But at the same time, you guys need to realize it's a zone, a level of interest where, of course, the market may reach that, it may retest it, so you need to see a little bit more of what's happening before getting that decision. So for starters, when I like to draw my zones, what I like to do is, obviously, it all depends on what time frame analysis. If you're looking at your bigger time frames from your daily, your 4 hour, Of course, utilize that 1 hour to get on your entries and just ride bigger waves, right? Catch bigger pips. But if you're looking at more of that scalping intraday session trader, you'll do what? You'll look at that 4 hour, that hour, that 15, that 5 minute. Enter between the 5 and 15 depending on how things play out. But best believe what we're going to do is when we draw our zones, me personally, if I am on TradingView, I like to draw it on the 2 hour, the 1 hour, and the 4 hour. So currently you see I'm on the daily, so let me actually go to the 4 hour real quick so I can show you guys exactly what I mean. Alright, so pretty much as you can see, here's a good example, right? So in this example, you see we're currently on the 4 hour level, right? As you can see right now, we already did what? We identified our 4 hour levels, our daily level. It's crazy how this market literally touches this right here and then moves to the upside. But let me show you guys something a little better of what I was looking at. Because one of the key things you want to identify when you're drawing your zones, you want to be able to look at the wicks that you see in this market, whether if it's on the downside or even looking at the wicks to the upside, right? You see it all over the place. Wicks to the downside, right? And of course you get some wicks to the upside. So for example, I'll actually show you guys that example I was talking about right now. But here's another example where what we're going to do it on our TradingView platform, we're going to click where it says that brush and we're actually going to grab the rectangle. And what we're going to do is, since we're dealing with zones, we're not dealing with exact points, rather a whole level, rather an area of interest where that market could reach, where that market could retest, or where that market could just blow past. Because that's the great thing about zones. We're going to be able to identify if that zone is holding as a good support, if that zone is holding as a good resistance, and play it off like that, right? So for example, as you can see right here, this is crazy because right here, you see that you already see this wick that's right here. You see there's more wicks right here. Then you see this candle right here. Here, let me take that off. You see this candle and it has this long wick. Me personally, when I like to draw my zones, I like to draw them from wicks to wicks. Don't like to go too much into the body. Now in this case, if you literally would have drawn that baby from that wick to the body, you see that it literally gives you what? Here, let me actually draw that. And then what you can do is you could double click that and actually make it a positive number, maybe like 1,000. So it takes it all the way to the right. Regardless, what you will notice is that this is a level of interest. What is it also? It's a nice horizontal daily level, right? So as you can see, the market does what? It retests this zone various times, and each and every time it does what? It fails to break lower. It wants to still hold as a support, and then eventually what do you get? You get that baby fails to create those lower lows, but best believe makes that move and pushes to that upside, right? So we're able to see those little things in the market and play off of that. But at the same time, for example, as you can see right here, this right here is another wick action, right? We would have done what? We would have drawn that wick to the body, right? Double click on that. Let's put a positive 1,000. And look at how literally, right? This market reaches this zone, boom, reaches it, and then makes a move to the downside. So you're going to notice zones definitely help you identify those levels that are going to serve as your support, levels that are going to serve as your resistance. But best believe also when that market blows past it and you see the confluence with everything else, just ride those, because that definitely can tell you that the momentum is now continuing to, whether if it's to the upside or whether if it just blows past to the downside. Now let me actually grab my charger real quick. So pretty much, here's another example where we're actually a little bit earlier, where literally you see that this right here is a horizontal level of price, right? The 4 hour. If we would have grabbed our zone, we would have grabbed it from the wick, right? Meeting up to the body and just drive that baby all the way to the right. Now, as you can see, if we drew it from this point right there, you see we did it just from here. And what we're going to do is let's actually extend that so I can show you guys. Literally now, when you extend it, you see that this wick does what? It overextends, right? And what you got to realize is when you look at bigger time frames, this is how you avoid getting faked out. Because if you look at smaller time frames, you may say, oh my gosh, it's breaking below. But realistically, what it's doing is it's just trying to obviously fake you out. Maybe it was a little divergence on the 15, on the 5 minute, but still, you see that this level this structure level, this horizontal, but best believe this zone is still being respected as a what? As a support to what? Push us up. And you see it right there. Retest pushes up, retest pushes up, retest pushes up. But best believe what happens here now. You get this moment that this market breaks below it, reaches this other level. This is why it's key to mark up your charts, because look what happens right after that. Once it touches this horizontal, boom, that horizontal does what? Every time it pushes to the downside and reaches your levels, those are going to serve as supports. Every time this baby comes to the upside and reaches these levels, they're going to serve as a resistance. So you need to understand that at some points when it reaches to the downside, what? It pushes up, and when it reaches to that upside serving resistances, you might get pushes to the downside. And this is known as a retracement. And look what it did after the retracement, continued. But regardless, zones help you because now you see, okay, that baby overextended. Maybe you would have been that individual who caught the breakout, right? However, right, what you would have noticed is after this happened, boom, look at how that market gets back into action. And then this right here is obviously more of that inverted head and shoulders. So later on, you guys will learn about reversal patterns and everything. But this is where, by seeing multiple things in the market, you're going to be able to confirm reversal patterns in the market and adding confluence. Where, for example, this is our level, this is our zone, right? This is our 4-hour horizontal level that serves as support. This right here is an inverted head and shoulders. What happens when you see an inverted head and shoulders? At the break of the neckline, which is right there, you buy it. So literally just imagine how you're able to see all that happen because you already see what happened. Boom. It created that inverted head right there, the retest of the shoulder, and then break of the neckline. But at the same time, if you would have just drawn your trend lines, it broke the trend line at the same point. Boom, explosion to the upside. So that's literally how you're able to, use zones where that you're going to use them as references of retest, references to see where that market plays out. But best believe, make sure to grab him with those wicks. Because, for example, this right here is just another example where, boom, let's say we grab it from this point to this point. You see that the market did what? It overextended into that daily level. If you guys want, just be patient. I'll just draw it off that wick. But still, here, let me draw it from that wick. What you see is that market does what? It sees this zone, but it overextends. Divergence, right? Now from that, now that market decides to what? Start falling. But look at how it literally uses this zone as reference points where it touches it not once, not twice, not 3 times, 4, 5, 6 before wanting to fall. That's why I tell you guys, be patient because, wait for those retests, wait for those moments where that market fails to keep going higher or wants to retest the level. Don't just get in at one point because, you don't want to get in exactly at the first moment because then, of course, you'll be happy, but then you got to deal with all this extra stuff. But, of course, if you didn't get in and maximize off the breakout, you can now have a zone of references that, as you can see, now it's serving as a what? Resistance to push us down. And best believe, as it's pushing us down, we know what levels to take it to, what levels to take it to, what levels to take it to. Look at how it hits the daily and then creates that what? Retracement going back up, right? So that's the great thing about your zones, about your levels, about your horizontals. But best believe, just reason with that structure of price. And don't just come into this game saying, hey, I want to come in for 100 pips. You're not at all. All of these little factors are going to literally be turning points where you're going to be able to maximize from and just rip it. So I hope this video broke it down for you guys in zones. Because as you can see, this whole economic term of supply and demand, you can make reference to it, but at the same time, just utilize your zones on the 1 hour, on the 2 hour, on the 4 hour, and you'll be able to catch great points that you want to enter from, that you want to reach to, and go from there. So I'll see you guys on the next video. Take care.